You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Buck.
Hey guys, Kevin Bupp here with episode number 144 of the Real Estate Investing for Cash Flow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Our guest for this week's show is family office manager Richard Wilson. And in today's show, we're going to be speaking with Richard about his involvement in the family office space. More specifically, we'll discuss how to tap into funding opportunities that exist within the family office space. Are you a real estate syndicator or one who's looking for private capital to fund a deal? If so, family offices need to be at the top of your list as potential source of capital. And during this call with Richard, we're going to share everything and anything that you need to know to tap into this space. And in this call with Richard, you're going to learn the following. You're going to learn what a family office is and how you can leverage them as a source of funding for your real estate deals. You'll learn what kind of real estate deals family offices are seeking. You'll learn how to find a list with contact information for every single family office in the country. You'll learn about the minimum deal size that the typical family office looks for. You'll learn how to network with the local family offices in your immediate area. You'll learn about the art of the deal pitch as it relates to family offices. You're also going to learn about the two books that have had the biggest impact on Richard's life and his business and why he feels that every business owner should read them and much, much more. And guys, if this is the first time that you're tuning into the show here, I want to welcome you to our incredible family that we have here at the Real Estate Investing for Cash Flow podcast, or for one of the many thousands that join us each and every week. I love you. I love you all for being here with me, right? You made the choice to be here. So I'm so grateful and so honored that you tune in each and every week. And like I do every week, just want to run through a very quick housekeeping item list. The first one is I offer a free 30-minute phone consultation. Been doing it now for a long time. Talked to hundreds of you. It's been awesome. It's a way for you and I to connect. If you're new to the business, you're seasoned, anywhere in the middle, you want to talk about real estate investing, this is a way for you and I to get on the phone together. 30 minutes, no ulterior motives, no sales pitch, nothing like that whatsoever. Just a way for us to chat, talk about real estate. I'd be more than happy to help you, be a sounding board. Maybe you got a deal you want to bounce off me, whatever it might be. If you'd like to schedule a call with me, you can go to my website, kevinbupp.com. On the right-hand side, there is a button that says Schedule a Call with Kevin. Click on that. It'll take you to my calendar. Pick a time that works for you. Next up, I've got another podcast other than this one. It is called the Mobile Home Park Investing Podcast, and it focuses on, guess what? 100% mobile home parks, right? That's what I do. That is my business of choice. I've owned hundreds of apartment units. I've owned hundreds of single-family homes. I've owned office buildings. I've owned small retail. I've owned just about every type of real estate there is. But for the past 5 to 6 years, I have been investing 100% in mobile home parks, and this is what I focus on. So I do have another podcast that focuses specifically on mobile home parks. Now, I will tell you this. Even if you have no interest in mobile home parks, that show has some very, very good information that's applicable to just about any type of real estate. So I will tell you that it might be worth your time. If you're in education mode, you want to learn, you want to take some strategies and tactics that are working for us and apply them to your other real estate business, then I would suggest you go scan through some of the episodes or just listen to them all, because you'll find information in each and every one of them that is applicable to any type of real estate that you're in, okay? You can find that on iTunes or on Stitcher Radio, or by going to mobilehomeparkacademy.com. Again, it's called the Mobile Home Park Investing Podcast. And I've got some other great news I want to mention here, which is that we have recently launched our Mobile Home Park Investment Partnership Fund, okay? Just went live a few weeks ago. So if you have any interest whatsoever in partnering with me and my highly skilled team on future mobile home park deals, you can read more about our company and the opportunity of working together by visiting sunrisecapitalinvestors.com. That is our company website. Again, it's sunrisecapitalinvestors.com. Now, we currently have 5 mobile home parks in contract, and that represents more than 400 lots, okay? We have multiple others behind that. And we're projecting that each and every one of these 5 mobile home parks to hit a 12% annualized cash-on-cash return for our investors and an overall return of more than 20%, okay? Allow me to show you why I believe that mobile home parks are one of the best-kept secrets and how they regularly outperform just about every other type of real estate investment that you probably know of, okay? We specialize, our team here at Sunrise Capital Investors, we specialize in uncovering hard-to-find off-market deals that offer huge amounts of upside potential that allow us to basically outperform and blow away the typical broker-listed property, okay? That's what our sweet spot is. We do a great job of finding off-market deals. If you want to learn more about partnering with us and working together on these incredible opportunities, you can visit us at sunrisecapitalinvestors.com. And there's another exciting item that kind of goes along with this partnership fund. And that exciting item is that we have a coaching program that teaches how to basically replicate our business, mobile home park investing, and we basically offer coaching on how to do that. And so for those that have an interest in investing with us side by side, we will give a lifetime access or lifetime membership to our Mobile Home Park Academy. And so if you're an investor, you'd like to invest alongside us, but maybe you'd also like to learn the mechanics of the mobile home park investing business, that allows you to do it. So we'll basically, anyone that invests with us or partners with us in our fund, we will give lifetime access to our Mobile Home Park Academy. And so one day comes along, you want to do your own deal, or you want to understand the mechanics or the inner workings of the business, you've got it. Literally, the Mobile Home Park Academy is our business turned inside out. You'll learn everything that we do inside and outside our business, okay? Again, to learn more about that opportunity, go to sunrisecapitalinvestors.com. And lastly, guys, if you happen to be in the Tampa Bay area, I love the opportunity to meet up with you. I love speaking with others who share the same passion for real estate investing. So you can reach me at my personal email. That is kevin@kevinbupp.com. Again, kevin@kevinbupp.com. And if our schedules align, we will work to coordinate a time to get together. Maybe it's a beer, coffee, whatever you have time for, whatever I have time for, we'll make it happen, okay? So reach out to me. I'd love to meet you. And that's it, guys. So let's go into the part of the show that you've been waiting for, which is our interview with Richard. So here we go. All right, guys, today on the show, we are honored to be joined by family office expert, fellow podcaster, and CEO of the Miami Family Office, Richard Wilson. Richard's the founder of the Wilson Holding Company, which produces $10 million annually in revenue through various operating businesses, including the Billionaire Family Office and the Family Club, which are the world's largest membership-based family office associations. In addition to these associations, the Wilson Holding Company also has ownership interests in training, single-family office management, investment conferences, data research, private equity, food, and energy industries. Aside from his direct business endeavors, Richard also has spoken at more than 150 conferences in 17 countries, and that's the #1 best-selling book in the family office industry. So without further ado, I'd like to welcome Richard Wilson to the show. Richard, how you doing today, my friend?
I'm great. Thanks for having me on.
Yeah, looking forward to chatting with you about family offices. And I'm going to give a little disclaimer here. Up until probably like 7 or 8 years ago, I had no idea what a family office even was. Now, I easily could have found out, but I didn't really have a need to know. But it's interesting because I think it's one of those, for a lot of investors, I mean, I guess if you're just getting into the real estate game, most might not know what a family office is. I mean, it's kind of like this underground society, but it's really not, right? I mean, it's definitely it's mainstream enough to where most people should know if you're in this business. But I would have to guess that there are a good portion that do not. And so, why don't we start off this way, Richard? Why don't you give us a little bit of a background about yourself, tell our listeners a little bit more about who you are, how you got into this industry, and then we'll dive into a little bit more about what actual family offices are and, what role they play.
Sure. Yeah, I'll make it real quick, just not to bore anyone, but essentially family offices are holistic, full balance sheet, kind of wealth management practices where, if you sold your mobile home park portfolio or your business for $50 million, $200 million, you might not want to walk down the street and walk into your bank and open up a mutual fund account. Say, here, please manage my $200 million. Chances are you like being in control, and that's how you built up your real estate or your operating business portfolio or asset and sold it. And because of that control background, most people who are ultra wealthy and are at that level of wealth or much greater like to continue to have control, and a family office allows you to exert more control than traditional wealth management solutions. And then also, just as importantly, it's very holistic. So they can help you with next generation giving and planning and legal protection and philanthropy and charitable giving and direct investments, not just trading in the public markets and putting your money in investment funds, but figuring out, how much money should you put it into apartment buildings versus mobile home parks versus, if you made your money in manufacturing, maybe some direct investments back into the space you made money. So that's what a family office is, just to not confuse people. The exciting thing about it, if you're like, well, should I listen to the rest of this podcast or not, is that family offices invest in all types of real estate. There's all different types of family offices. There's 20,000 of them globally, no matter where you're listening from, as long as you're near somewhat of a major city, which could be just major for your country, even if it's not globally a Tokyo or a London or something, then there are family offices, whether they call themselves that yet or not. More and more are every day. And it's a huge opportunity for capital raising, joint ventures, et cetera. So I got into the space by seeing in 2006 and 2007, after working in capital markets and working with some wealth management firms, that there was this trend of some wealth managers out there, one out of every 500 I talked to and met with, that called themselves a family office. And I saw there was 500 people being helpful gurus in the wealth management space. But in the family office space, backwards in my mind, nobody was. No one was being a helpful trail guide to the space. And I just thought, like, wow, how backwards. That's the most valuable niche in wealth management. Just happens to be a newer niche that wasn't as formalized and talked about as much yet. So I just jumped into it and started providing as much value as I could, and bought familyoffices.com. And, 9 years later, here I am now, with, I've held 54 conferences and have written 3 books on the space and have the best-selling book, yada, yada, a bunch of boring bullet points, can continue on. But, that's how we got here.
Okay. Where do you find the time? You got a family of 2 with a third on the way. It sounds like you're all over the place, jet setting.
Yeah, we have, 15 people on the team, and we're trying to get to 20 as soon as possible. I was in Mumbai, New Delhi, India last week, and I'm headed to Cuba in 2 days. But I really do try not to travel a ton anymore. I'm very really selective on that. And just, this morning I got up at 4:45 just to knock out stuff before people's normal day begins. I find that's like a big trick on getting on top of chaos.
I agree with you. I woke up at 4:15 this morning, so I think we're along the same lines. How much sleep we've probably gotten today. Yeah, I beat you by half an hour.
Sure.
So talk to me a little bit about, our listener base, they're real estate investors, and we primarily focus on commercial real estate on this show. That could range anywhere from office buildings, shopping centers, mobile home parks, apartment buildings, assisted living facilities. It runs the gamut. How might our role as real estate investors kind of tie in with your role as a family office manager? How do the two work together?
Sure. Well, essentially, I'm looking for the best quality deals for my family, for Wilson Holding Company, but on a bigger scale for the single family offices that I help run. And the only other term we need to define is that if someone has a single family office, they have 10, 20, 50 people just for their own family. A multifamily office is like a holistic wealth management firm. They might serve 50 families that are ultra wealthy. But essentially, if it's my job to find the best deals possible to bring to my clients, like one of my clients is worth over $300 million. We're sitting on over $50 million of liquidity right now. And he pays me a retainer plus participation upside in deals that we close to help him in organizing his single family office consistently and adding people to his team, and then also finding great deals. And so I don't impress him unless I bring deals that are better than the average stuff that comes into his email inbox. And he's pretty well connected and known in his local community. And I try to de-risk those deals and bring him the ones that fit his mandate. And each family's mandate might be slightly different from the next. But if you are a real estate person listening to this right now, you could build a custom database of family offices in your local area. You could participate in local, regional family office conferences. You could keep an eye out in the news, for this term, and start building a list of family office contacts, and just being aware of where the ultra wealthy frequenting in your city or in the top 2 or 3 cities around you, to start positioning yourself and building that Rolodex of ultra wealthy families that could be on your cap table on your next real estate deal, perhaps.
Okay, so from a management position, just so I understand, from a management position, you're actually out there looking for potential opportunities for this family office that you oversee, correct? That's your role of that particular relationship. Okay.
Right. That's correct.
And you're out there vetting deals. Okay. So, and I'm assuming every different family office, they're looking for different characteristics or different types of deals, right? It's just not this particular investor, maybe he likes shopping centers and maybe he likes certain parts of the country, right? So there's some very narrowed down particulars that they might be looking for. Am I accurate with that statement?
Yeah. That's true. And you'll hear one statement like, if you met one family office, you've met one family office, and that's not true. There's a lot of similarities once you get to know the industry really well. You see there's just 10 or 12 different flavors of them out there, and you learn to categorize them like a personality type on probably what they're looking for, but zeroing in on their specifics and listening very closely to them so you don't ever waste their time with a deal that doesn't fit their strike zone is really important. And also, real estate is very much a local game. Nobody wants to invest in anything, whether it's biotech, operating businesses, or real estate, that they don't understand. And one of the benefits of real estate is you can see it, you can touch it, and it's a hard asset. And if you are trying to work with family offices in New York for a deal in Scottsdale, Arizona, it's going to be harder. Obviously, it's going to be easier to sell mobile home park to a family office in Scottsdale if that's where the mobile home park is based. And it might sound obvious, but we have people all the time that are flying around all over the nation to raise capital for deals in Boulder, Colorado. And they should just go like way deep in Colorado, or maybe one or two other cities close by, the state of Colorado that are financial centers. And I think it's a big common mistake of real estate people just go too broad when trying to raise capital, I think.
Interesting. Okay. And what might the relationship look like? Let's assume that you find a deal for your client. He likes the deal. What might that relationship look like? Let's say it's you find it through someone like myself. I'm a real estate investor, have an opportunity. I'm looking to raise capital in this particular opportunity. Would that relationship be more along the lines of a joint venture? I mean, would it just be a debt relationship? Would there be equity involved? Give me an idea. I know that it probably varies. It's probably all over the board, but just give me a hypothetical situation of what that relationship might look like.
Sure. So yesterday we had a family office in here who's going to be at our family office real estate event coming up here. And essentially what he said is that they've traditionally been an LP, meaning they're going into someone else's investment structure and not having control and just in a traditional LP relationship, but that they recently have done a couple co-GP investments where someone they knew was raising institutional capital, and it was a bigger deal, and they didn't have enough as a GP to put up the 10 or 15% the institutional investor wanted. So they funded, 80% of the GP capital needs to be a co-GP in the deal. That's different from the single family office I run, where we did a acquisition of 93 triple net lease properties and have them rented out to a big box store, and we loaded them up with tons of debt, so it produced an NOL, a net operating loss each year to help us tax-wise. And we've also closed a couple other deals where we're just, basically doing a debt type investment on the deal rather than being either a direct investor or an LP. So I think those are some of the big boxes that the families fall into is, are you an LP? Are you a GP, meaning you're a family that's also running an investment management business, and that's maybe how they created their wealth? Are you a co-GP, meaning supporting someone who needs that capital to put up and they're just tapped out because of other projects they've involved in? Or are you a direct investor and you're going and doing deals yourself and you don't want anyone else in your cap table? You might pay someone a finder's fee or a consulting fee, but some families just want control and, maybe some operating property management help. But some families are very control sensitive. So those are some of the major categories that I would say the most popular ways that the families play in the real estate space structure-wise.
Okay, what would be some of the minimum investment sizes? I mean, are we talking like we'd be wasting our time if we came to a family and office with anything less than like $5 million? Is it $10 million, bigger, smaller?
No, I think that, like my client that's, 300 million plus, have done a deal as small as 775,000. And it's a good way to get to know a family by doing a smaller deal. And I think that some families will go as small as $500,000 on some deals. But, if you're dealing with $1 billion plus family, a billionaire family, then typically they're not wanting to write checks for more than $20 million. But again, to get to know someone, maybe they would do one at $2 million or $5 million. So I would just say if it's $1 billion plus, then yeah, they're not going to look at $1 million deal typically. But there's nothing wrong with starting small with families. It's different than institutions that way.
Okay. How would we find out if we're going to go start putting together a list of family offices in a particular region? How do we go about doing that, and how do we know what size that particular family office is? Is that readily available information?
It's not super easy. We can always find some. So on LinkedIn, we have a group called the Family Office Club, 100% free to join, and you can actually search in there by city and state and zip codes, and you can find some names that way. Obviously, people can look on Google. It's easy to get some names, and the trick is to layer yourself, I think, into local communities. That's just going to create good luck along the way. Like, I'm part of EO in the local Rolls-Royce Bentley Association. I'm looking at joining the Yacht Club and YPO for a local chapter here over the next year. And I think you have to combine proactive reach outs and going to events where these people frequent with like layering yourself in natural communities, like where you live, or where you just have fun, whether it's a nice golf course or you have fun at a Porsche driving track, because that's your thing. Something that's just naturally part of your DNA, genuinely, that you enjoy doing, I think is always the best approach. Obviously, or maybe not obviously, but like for 9 years now, we've been producing a family office database, and we've been updating that, but it's not secret stuff that no one couldn't find on their own. We've just, been hiring researchers, and we leverage that across people who buy the database. But you can go and build one yourself, and it's really just a saving of time using a database provider like ours. It's not something that you couldn't do if you spend enough time like building it up on your own. So I always just encourage people to realize that, because if you're in some area that is not known as a financial hub, then it's going to take rolling up your sleeves and probably digging around and figuring some of this out, and figuring out who is a family office but doesn't call themselves that, and how can you add value to these families by knowing this trend of family offices before perhaps they even do. And you can actually get your foot in the door by adding value about educating them on this trend. And if you're the first one that helps them in organizing their affairs in a more holistic way, it's just a way to gain respect and get some traction with a family that, so you're not just coming in there to sell them something. That's always a helpful thing.
Yeah, no, that sounds good. And so you have the database. I mean, that's one of your companies. Is that something that the average individual can actually join, pay to get access to, or is that only for other family offices?
No, you can pay to get access to. I mean, we didn't, pre-script this, so I'll just say this real quick and just get back to adding value. But basically, we have like a $200 a month membership where you can come to all of our family office conferences, and that includes the database for free as part of it. So that's how people get access to it, through the Family Office Club. But before we get off the topic of like how to find these family offices, the number one most important thing, which is not in my best interest to say, is that when we layer communities on top of proactive reach outs using a database, what's even more important and what's part of the community approach is really figuring out your DNA and your positioning in the landscape of family offices and the landscape of commercial real estate and cash flowing real estate. Like, what is your unique value add that you can say in a sentence and does make you stand out from the competition, whether it's your approach or your focus or your track record or fee structure, et cetera. And then figuring out how do you articulate that and architect some way to communicate that to the family offices in the 2 to 3 or 3 to 4 cities that are easier for you to visit over and over again, because the real trick is designing a way that family offices will know of you and will be keeping you top of mind and first in mind for that exact positioning that you have selected for yourself. So, in your case, you have the real estate investing for cash flow and the mobile home park investing, and that's relatively unique in itself. But figuring out how you now make that known by X number of people and show your genuine expertise. You have the podcast, already going out. And if you layer that with 5 or 6 or 9 other strategies, like using YouTube, Facebook, printed newsletter, local speeches, et cetera, then I just find that all creates a lot of good luck and good word of mouth and goodwill in the family office community. And that's how it built our business. So I think that, you can be mistaken if you hear, oh, I just need to be part of the yacht club, or, oh yeah, I've heard that before, or like, oh, I just need to get this database, that's going to be the magic bullet. Like, just like anything else, it needs to be, 5, 10, 15 different things, all aligned with a clear picture of what you stand for and what value you're delivering. And then that's what people see is like, oh, that's someone's really committed to doing this. They're not just, fly by night trying it out. They're not like half committed, working from their garage or something in their home office and not not reinvested in the process. That's what we've found that families resonate with, because it shows a long-term mindset versus some short-term, trying to make money off a short-term deal or approach.
Yeah, that's great information. That's great advice. It's all about adding value. I mean, what you just said there to kind of boil that down is how can we add value to that particular family office, right? And not just go in there and trying to pitch a property or pitch ourselves, but how can we bring value to them so that they notice us and we pique their interest enough so that they might dig a little deeper with who we are, or what kind of opportunities we might have access to, or how we might be able to work together to each other's benefit. So, no, I think that's great advice.
Right.
Richard, is there anything that we haven't discussed? And I know that we don't have a ton of time here, but I mean, is there anything that we haven't discussed regarding family offices, regarding that relationship between a family office and a real estate investor? Is there anything that we haven't talked about that you feel is pertinent information that our listeners should know?
Yeah, I think there's two things. One is that anyone with $100 million or more of net worth should have a family office of some type in place. And I think just everyone needs to know that. Most people have never heard the word family office before. And so I would definitely keep your ear out for companies going public, someone selling their business, maybe a relative or a friend or old school friend, et cetera, who sold their business, because there might be a way to use your real estate skills inside of their family office, either doing a joint venture with them or exclusively working for that family and helping them deploy X amount of their capital. So that's really important to know, that the $100 million number. And then also, when I've interviewed family offices for my books, I think it's interesting that one of the most common things that comes out when I say, what's your $100,000 piece of advice, or what's the best piece of advice you could give, that a lot of people bring up the fact that no one listens to them, and they always just come in the office and pitch. And I know that you just summarized my rambling and so basically just add value first. But just to reemphasize that further, these are business people, not financial institutions. So you have to come to them with interesting business angles. Hey, let me introduce these two billionaire families together because they're both in manufacturing. Or, hey, let me introduce these three centimillionaire families to each other because they're all looking to do self-storage deals, and they can trade deal flow between each other. And, hopefully they keep you in the loop and have a chair for you at the table and some way to do business if business gets done. But creating goodwill and just being open-minded business-wise as you come into a meeting, instead of coming in and saying, here's my pitch deck, let me talk for 20 minutes and tell you what terms you should take as an LP. With a family office, you should come in with an open mindset to see if they would want a JV on something, or do a direct investment mandate through you using your intelligence, or structure something that's performance only and maybe get fatter performance fees because you're not charging a management fee, et cetera. Just keeping that open business mind to be able to, as Gary Vaynerchuk says, instead of jab, counter punch. It's always better to listen and be more effective at a business proposal for a family by doing that. And I just think that can't be overemphasized, the amount that you just approach it open-minded, listening, and, not just saying, here's how we add value as a commercial real estate firm, because some people will be trying to do that, but approaching it more like a business deal rather than just straightforward LPGP investment discussion.
Mm-hmm. No, that's great advice. And, you kind of lead me into another question I wanted to ask you. You brought up Gary Vaynerchuk, which I'm a big fan of his books and his material. Are there any books that have had a major impact on your life that you think they'd be valuable to recommend to our listeners? It could be business, real estate, it could be anything, nonfiction, fiction, just something that's had a major impact on your life.
Yeah, one book I read every year is Success Principles by Jack Canfield. There's about 55 principles in there, and I just always get a different meaning from it, and I love it. Another one was it's called Scaling Up Now. It was Mastering the Rockefeller Habits, which I think I actually liked a little bit better in the first version. It's by Vern Harnish. He talks about KPIs, and he talks about choke points, and we use choke points a lot in our business, identifying what's the bottleneck in our business and try to obtain that. And try to obtain distribution points in our industry. Okay, where do people consume family office knowledge? Because we want to dominate those points. Oh, on Amazon. Okay, let's write best-selling paperback book and make sure it continues to be the best-selling one. They go on Google. Okay, let's buy familyoffices.com and podcast, et cetera. So, mastering the Rockefeller habits is a major useful tool for us in growing the business. And that choke point strategy, I think, can't be overused enough, especially if you don't have much of a budget, because a lot of choke points can be acquired just through grunt work and positioning, I think, and just being, aware of what you're standing for in the marketplace.
No, that's a phenomenal book. In fact, I think I've probably bought over 100 copies of that book over the past couple of years, Mastering the Rockefeller Habits, for friends and other business owners, and just kind of giving out as gifts or send it through Amazon as a gift. And phenomenal book. Easy read, too. Very easy read. And, short and sweet, but very to the point. Lots of great sound principles. One last question. Sure. This is somewhat of a difficult question, Richard, but maybe not. If you could go back, you've been doing this now for quite some time, right? I don't know how old you are. I haven't asked your age. I'm not going to ask you on the show, but either way, it sounds like, you're very knowledgeable. You've been doing this for quite some time. If you can go back to year one of when you first got into the family office side of things, knowing what you know today, what advice would you give yourself?
This is our 9th year doing it. I'm in my 30s. I'm still relatively young. I think my business will drastically improve the older I look, which is happening quickly, thankfully. The three kids now, third one coming soon, like we talked about. But I think what I would do if I went back was niche faster. I've probably lost at least $300,000 or $400,000 by just being too broad in what I was trying to stand for. It's great that we have the Family Office Club. Excellent. We're not going to delete that now that it's been very successful, but it is not highly refined. And so we said, well, single family offices for my business model is a little bit more valuable. So let's buy singlefamilyoffices.com, write a book on that niche. And that led to us having more success and upswing in the mandates we landed. And I, wish I had done that 2-3 years earlier. And I think that when someone's starting out, like if you go back to the choke point model, getting a small choke point then is like the Jim Collins flywheel, like in Good to Great. Then you get to the next checkpoint or a choke point, and you get that momentum, and the flywheel turns over a single time, second time, a third time, and the choke points add up. And it's a lot easier to dominate penny stock world and be the number one penny stock guru or the number one mobile home park guru just in Miami, Florida, rather than trying to be the real estate guru, or the stock market guru. And I did it a little bit backwards. It makes it easier now to go into a little niche, but I did it the harder way. I think we should have started with the smaller niche, dominate that, use that for momentum. So I would just encourage people when they're defining what their brand stands for and their positioning and what they want to compete for, like what keyword they're going to own in their business or what choke point they're going to obtain first, just to go after something that they could get in the next 18 to 24 months and use that to propel themselves, and can always go broader later. But when you can be the niche thing that hits people right between the eyes short term, that's really valuable because no one else has said, hey, we only serve people that fit XYZ criteria. Then those XYZ people are going to be like, oh, thank God. Extra fast-acting migraine pill. That's what I have is a migraine. I don't want a red pill.
Right.
So, yeah, that was a pretty big mistake that I could have easily avoided if I was just more wise, I think, and what I was doing.
Yeah, there's so many sound principles that you just mentioned there. One can apply to real estate investors. I have this conversation all the time. Whether they're brand new or maybe they've done some investments, they've flipped a few homes or maybe they own a few apartment buildings, but now they're wondering what's next, and they almost consider themselves opportunistic investors, where they're kind of looking at everything. Oh, I looked at a self-storage facility the other day, looked at an office building the other day, different MSAs, kind of all over the map. I'm like, just focus. Forget whatever it is you have the most passion for. I know that it's hard to say I have passion for mobile home parks, but I really do. I really like the housing. I like the niche. I like the industry. Now, do I have a passion enough that I'd want to live in one? Probably not, but I have a passion and I like how it fits and it fills a void in the affordable housing market. But that's all we do. That's all I look at. If someone brought me an opportunity that was an apartment deal, I would look at it because I get that space. I've owned many apartment buildings, but I do not spend any time prospecting for them. I don't even talk about apartment buildings unless it was brought to me. And so the only thing that we focus in are mobile home parks. And I feel like that you start chasing those shiny objects, and your focus gets diluted, and it's really hard to be great at everything. Now, I do know investors that have quite a diverse portfolio of commercial investments. They might own shopping centers and self-storage facilities, this, that, and the other, and they might do great at it, but that's not the norm. The norm is focus on one or two things and become the best you can be at it. And same holds true with our podcast. We've been doing the Real Estate Investing for Cash Flow podcast for over 2 years now, and it's broad-based commercial real estate investments. We just started a mobile home park investing podcast about 3 months ago. The numbers are nowhere near what our current podcast is in terms of downloads or listeners, but it's niche. All we talk about is mobile home park investing. So I know those that are listening into that show, they have a sincere interest in that industry, and that's important to me. I don't care what the numbers look like, because even if it's a fraction of what we get in terms of downloads for this show, it doesn't matter. They are tuning in because they want to know everything there is to know about mobile home parks, and that's what I have to give. So this has been a lot of fun. I really appreciate you coming on the show, and I want to give out your website for those that are listening in if they want to learn more about you and your company. And I've got wilsonholdingcompany.com. Is that the best place that they can find out more about you and your group?
No, I think the more exciting one would just be familyoffices.com.
Okay.
We've got a free ebook there that's like 3 or 4 chapters of our paperback book, and you can just download that for free on familyoffices.com. So that's probably the best place to start.
Okay, sounds good. So go check him out at familyoffices.com. And then also you need to check out his podcast. Like I said, he is a fellow podcaster. Richard, do you do a weekly show? Is that how often you release?
Yeah, it's twice a week. We do
twice a week.
Just a mandate update, like what's in our clients' investment mandate this week. Mm-hmm. Like I know you do some Friday tips, I think. It's a shorter episode, and then we do a longer episode as well.
I used to do the Friday tips, and I've gotten a lot of slack for that over the past 6 months because I've missed a lot of Friday episodes, and it looks like those are probably the more favored ones because they're short and sweet and to the point, and can be listened to on a quick trip to work. But So, but yeah, in any event, well, it's an awesome podcast. Richard, it's been a lot of fun having you on the show. I appreciate all your advice that you've shared with our listeners today, and I wish you the best in all your endeavors. You take care, my friend.
Great, appreciate it, Kevin. Thank you.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com, and we'll see you next Monday morning.